So Bitcoin, if you define risk as volatility, Bitcoin is definitely a risky investment. So your typical currency is around like a 5 to 10 vol, depending on the market cycle. Bitcoin's more like a 70 or 80 vol. So it has huge run ups and massive collapses. But the volatility we're thinking of is in terms of US dollars. So volatility tends to be inversely correlated to market cap. And this is true for any asset. So if you can look at Amazon in the early 2000s, it had a huge price peak in that price bubble. It drew down 94% over an 18-month period before, going on a historic bull run of 33,000% for the 2 decades after. So anytime an asset is super small, you can think of it as like a dinghy on a big ocean of market movements. And Bitcoin is essentially that. It's a dinghy. It's a 200 sub $200 billion asset in a $100 trillion market class. So it is super volatile. Which, if you're defining volatility as risk, it is high risk. The one aspect of that, though, is as it grows, its volatility is shrinking. So, as expected, as its market cap expands, the volatility is shrinking. And it's essentially considered the ultimate risk on asset today because it's so high volatility. Like you have, large capital pools considering maybe a 1% allocation into Bitcoin because it's so high risk and so new. But it is a risk on asset, interestingly, because it's competing to be the ultimate risk off asset. It's actually competing to undermine gold. So, in that sense, Bitcoin is high risk today, but it's competing to be the lowest risk asset that you could ever own.